Hello there, Maverick traders. This is Imri, and welcome to today's currency recap. So not a lot going on today, like no huge moves one way or the other really, but some important stuff did happen today. So first off, we have the UK's Prime Minister, Liz Truss, resigned. That's a sticky situation over there in the UK. We'll have to see what's going to happen there. I do think it's highly unlikely that Boris Johnson is going to step back in, despite some calls within the Tory party, looking for exactly that scenario. Equities had a strong start to the day and then rolled over for a pretty sharp intraday reversal. And the 10-year yield just continues to march on higher. It's above 4.2% as of recording this video. Crypto more or less flat at time of recording, and gold and oil also more or less flat. Okay, so the S&P, where I have this support region on the S&P is coincidentally very close to the 61.8% Fibonacci retracement of the entire rally from the March 2020 lows to the 2021 highs. So is that a coincidence? No, of course not. Typically, that's what we see with important support levels or resistance levels if we're dealing with the bear market. So does that mean the 3200, circa 3200 area in the S&P is going to hold? Does it mean we're going to visit that area? I'm not saying one way or the other. My personal bias is that, yes, we will get another low. And I do think that the combination of this support level and the fact that it's the 61.8% fib is going to serve as a magnet and drop prices lower. So my personal hunch is we're going to see fresh lows in equities over the coming days. But I do think after we make a new low, we will see a very sharp rebound. Okay, so keeping an eye out for that, of course. And over in the total world stock index, it's pretty similar. There isn't the corresponding same kind of technical support that I could identify, but we are trading very close to that 61.8% Fibonacci area. Now remember, fib levels are not like hard lines in the sand. It's not like the market has to reverse right off of that level or it's toast. We could definitely poke our heads below that level or find support just marginally above it, right? So there are zones, there are areas. Sometimes they work with amazing precision, but I wouldn't say that occurs the vast majority of the time. And over in crypto land, this just looks like a low base waiting to break down. I've been saying this for weeks, and I might be saying it for weeks to come, I suppose. But in all seriousness, I don't think the market can sustain this kind of sideways trading for much longer. And when all this energy that's kind of coiling up, all these orders, that liquidity's got to go somewhere. And just judging from the chart pattern, it looks like it's gonna head lower. So keep an eye on that. I don't think crypto is done inflicting pain on those crypto investors. So I'm going to give the market a -2 outlook here. You could make a compelling argument, I suppose, that we're going to establish some kind of base here and find support off that base. But like I said, my personal bias suggests that we're looking for slightly lower in equity markets first. And of course, it could be worse than that, but let's take it one tick at a time. In terms of news, there isn't too much coming out tomorrow. Overnight trading, we'll see some retail sales come out of the UK. And then 8:30 a.m. Eastern time, we're going to see some retail sales figures come out of Canada. Now, moving on to currency analysis. Right, so even though it looks like Ripple and Cardano had pretty big down days today, in the context of the actual price charts, it's kind of a nothing. All the cryptos are kind of doing this, the more or less, I should say the major market cap cryptos that we're covering are more or less doing very similar things on their respective price charts. So in other words, just not all that interesting. Fiat currencies, today was a fairly muted day. The yen continues to weaken, and we're going to take a look at the yen basket in just a little bit, so keep an eye on that. The other currencies more or less flat on the day, just not really any big moves, which means tomorrow could be an excellent trading day if we get that burst of volatility that I'm hoping we do get, or it could be another day of more or less consolidation or corrective pullbacks. Now, in terms of velocity, again, like the fact that we're not doing a whole lot is definitely representative here on the velocity charts. I very grudgingly gave the Kiwi a +1. I mean, I just don't see too much there. The only rating I feel very good about here is giving the yen a -2. I think regardless of whether equities are risk on or risk off, it looks like the yen is set to weaken, at least in the immediate short term. And that brings us to some possible trades. So here's what I'm looking at, just going over some of the currencies that I've been keeping track of for you guys over the last several weeks. So the Aussie, I mean, we had a big breakdown last week, and now this looks like a sideways corrective sequence. And I think we're just taking a breather before the Aussie breaks down further. And I think we're going to touch down into this lower support region that I have. Right, so I highlighted that last week. Lots of major pivot points coming in, not too much lower in the index. That comes in around 75. In the euro, we're trading back at resistance. Just based purely on the basket, I don't see too much to do here, and it's hard to call the market one way or the other. If I'm looking at momentum analysis, this looks like we're pushing on a string. In other words, there doesn't look to be a lot of strength in it. But when I'm taking a look at the price action, we're just going sideways. So the euro, in my opinion, at least like in the immediate prospects of the euro, it's kind of a coin flip. We'll have to wait and see whether we break decisively below this resistance region or if we poke our head above it. And I think that will signal the direction for the euro, that the euro is then going to take over its next major swing. Pound, I mean, I'm pretty bullish on the pound, guys. Just ignore the political turmoil, ignore all of that. If I'm just focusing on price chart of the currency, this looks bullish. I mean, we have a classic Elliott wave 5-wave advance here, which tells me the greater trend is pointed higher. So I'm going to be looking for pullbacks to buy the pound against many of the weaker currencies, such as the yen. So I've been alerting you to this falling wedge, ending diagonal, whatever you want to call it. Falling wedge is the old school technical term. Classic chart pattern. Ending diagonal is the Elliott wave term. But both cases, the pattern portends a reversal in the future. But before we make that reversal, I think we're going to make a new low below this pivot point here, going back to mid-September. So I think the yen's going to make fresh new lows on the crosses. We've already reached incredible new highs in dollar yen, and I think we took out 150. So we're going to take a look at dollar yen a little bit as well. If you're taking pot shots at dollar yen trying to short it, look, my advice is don't. This is one of the most mighty uptrends I've seen in a currency, and trying to short this is like standing in the way of a steamroller. Let the market roll over first, let it give you decisive proof that it's rolled over, and then look to short it. But I'm a trend trader, so until I get that evidence, I'm going to look for reasons to buy dollar yen, not sell it. Simple as that. Okay, so Kiwi. So we've touched down into the support region that I've called out previously, and we bounced a little bit more fiercely here than I would have thought. But again, this entire rally has a very corrective look to it. This doesn't look very convincing as the start of a bullish power reversal. So I'm expecting new lows in the Kiwi as well. And I'll be looking for reasons to short the Kiwi, not to buy it. And the dollar, I think, is going to take a breather. I mean, we're pushing up against some major levels here. I would be surprised if the dollar took a major dive, and reversed several weeks worth of gains. I think it's more likely we trade somewhat lower, but broadly sideways before accelerating once more to the upside. So that's it for me on potential trades per se, just in terms of tracking these various currency baskets that I've been keeping an eye on for you over the last several weeks. So fairly quiet day. I mean, pound strength on the crosses. Like I said, I think the dollar's going to take a breather. And equities will likely continue to be volatile with the intraday swings. Today's a perfect example of that, the kind of action I'm talking about. So I think tomorrow, I'm such a genius tomorrow by saying that tomorrow's either going to be a really good trading day or a kind of a nothing of a trading day. But, I tend to trade breakouts. So, for me, I'm really waiting for that burst of volatility so that I can assess whether I think that breakout is for real or not. So if I don't get that burst of volatility, I personally won't be trading. If you prefer trading in lower volatility environments, there might be a setup out there for you. Just personally wouldn't fit my personal trading plan. That's all. Okay, guys, not too much going on today, but yeah, some important fundamental news coming out tomorrow. Markets desperate for any signs to suggest that inflation is peaking or cresting. So those Canadian retail sales will be particularly important to keep an eye on. But that's it for me, everyone. Take care. Good trading. I'll see you soon.